gentlemen, good day and welcome to Bharat Electronics Limited Q3 FY2024 post-earning conference call hosted by Antique Stock Broking. As a reminder, all participant line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Ria. Good morning, everyone. On behalf of Antique Stock Broking Limited, I welcome you all to Q3 FY24 post-earnings call of Bharat Electronics Limited. To discuss the earnings from the management, we have Mr. Bhanu Prakash Srivastava, Chairman and Managing Director of the company, Mr. Damodar Bhattar, Director Finance and CFO, and Mr. Srinivas, Company Secretary. I'll hand over the call to Mr. Bhanu Prakash Srivastava for the opening remarks, post which we can open the floor for question and answer. Over to you, sir.
Good morning to all of you. Bharat Electronics Board met on 29th January and then approved the result up to Q3. Our turnover increased to 11,485 crore rupees, which is an increase of 4.35% to corresponding figure of rupees 11,006 crores. The PBT has increased to 2,949 crore, which is a jump of 33.84 crores of the corresponding figure of last year. Similarly, PAT also has increased, EBITDA has increased, so there has been a significant increase in profitability. Our order booking this year has been very good against our guidance of 20,000. By end of December, we have already received the order of 26,761 crore rupees, and more orders are coming. So, positive outlook and for Bharat Electronics, and I am now open for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Hi. Good morning, everyone. And thanks for the opportunity. First of all, congratulations for a good set of numbers and very robust order inflow this year.
There are more than 20 parties in the conference.
I have a couple of questions. The first one is essentially on the revenue. So if I look at the revenue growth so far, it has remained quite, I would say, subdued. And we guided for around 12 to 15% growth for this year. So given that ask rate for Q4 is quite steep, what kind of revenue growth we can expect for FY24? And there was 400 crores of spillover in last quarter. And this quarter also, you mentioned in the notes that because of the ongoing Israel-Palestine conflict, there could have been a certain shortfall. So if possible, if you can highlight on these points. That is the first question.
Yes. As far as revenue growth is concerned, still we stick to our guidance of around 15% growth over and above what we did last year, which amount to closer to 20,000 crores. Yes, there has been an impact of because of the Israel-Hamas conflict, which has been affecting in dispatches. But along with our partners in Israel, we are working on that. We overcome 400 to 500 crore last quarter, but this quarter again there was a spillover of around 400 to 500 crore, which landed in first week of January. So these are the challenges which are there. Traditionally, Bharat Electronics has been robust in Q4. and we are very confident that in Q4, though it is asking rate is steep, but we will be able to achieve that.
Okay, so that's very comforting. The second question is essentially on the order book. Now we have a very, very significant order book of 76,000 odd crores. Is it possible to mention the average execution period of this? So, it will be executed over what time frame? This is what I wanted to ask, because some of these orders are pretty particularly pertaining to shipyards and all seem to be quite long-ranged orders. So I wanted more actually clarity on the FY25 earnings, what we can expect as a result of execution of this order book. So if you can just mention the average execution period of this order book, that would be great.
See, if you see that all big ticket projects, they have an execution period starting from 18 months to anywhere between 4 years, 3.5 to 4 years, depending upon the availability and execution plan of the platforms on which these products are going. So even though we can execute it early, but deliveries are linked to that delivery or the production plan of that platform. So the 76,400 what we have ordered till Q3, its deliveries are starting anywhere from next year to another 4 years you can take, and that will keep on adding.
Okay. All right, sir. I have other questions. I will get back in the queue. Thank you and all the best.
Thank you. Next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. So this year, just to understand directionally and, I think we remember completely the way you were guiding last 1.5, 2 years that order intake will remain strong, which you have showcased last year as well and this year as well. When we go, and I'm not asking more from because there is an election next year, but generally, can you talk about little more on platforms which are bigger, which can drive your order intake further, let's say, over the next FY25-26? Can you talk about a little bit more on that? That will be helpful.
See, one of the, in this year, if you see, Shakti system, that is the EW system, is in pipeline. Then there is a program for BMP-2 upgrade, which is there in pipeline. Next year, if you see that both Air Force and Army, they are working on QRSAMs, which is likely to materialize. Some EW system on avionics, some platform, airborne platform are likely to come. So these are all linked to a big government program. Apart from that, there are always upgrades, refits from shipyards, standalone requirement farm services keep on coming. So that's how that business is.
So if one has to, can you talk about a little more on the amount of pipeline with respect to these orders for 25-26 and going forward, do you think that momentum will be sustained going forward? And because that asking run rate will increase significantly for you for the next 2 years. So if you can throw some light on the asking run rate or in the absolute terms that, how much order intake you think you'll be able to get over the next 2 years based on the opportunity size?
See, if you see opportunity size, we have been guiding 25,000 crores. This year we guided 20,000 crores, but there were many procurement of the government which were fast-tracked. And that's how, which were supposed to come next year, they have come in this year itself. So to that extent, if you see that next year it will be lesser because these are all orders for next 3 to 4 years execution period. So our assessment is that seeing that all upgrades and standalone requirements and platforms, because big platforms, there is always a risk of spilling over to next financial year. But if you see, if you are asking me projection of next 2 years, 24, 25 and 25, 26, I am expecting around 50,000 crore worth order in 2 years should come.
We expect to maintain a order to revenue of at least minimum 2 years at any point of 2 years plus at any point of time.
And so lastly, just on execution, as you are still very confident on Q4, but let's assume that given the backlog is strong in Q4 because of the ongoing Israel issue remains, let's not take a quarter view. But generally, do you think this will get subsided going forward in the quarters and 25-26? The growth should be material for you, let's say closer to 20-25%. Can this be doable? I'm just not trying to ask what will happen in Q4, but certainly in 25-26.
See, 25% growth rate is something I don't think we will be able to achieve because our base also is increasing, if you see.
Mm-hmm.
When we are growing, last year we grew by 15%, this year 15%. So base also is increasing. So I don't think we will be able to go to growth rate of 20-25% in our kind of business. Mm-hmm. It will be hovering around what we said that in the range of 15%.
Okay. My question was made that if Q4 still remains the ongoing issue of Israel, then that execution should catch up next year. I was asking more from that perspective. So
but we are confident that what projections given because there are plan A, plan B, plan C we have. Whatever we have committed, we would like to.
Yeah. Sure. Thank you very much, sir, and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. Just on Nitin's question, on the execution side, if you could just help us, how big would be the LRSAM order for us in the order book, or if there's any other orders which you're working with the Israelis? So what would be the quantum of that at this point?
See, if you see, as of now, our exposure to Israeli LRSAM is around 6,500 crores. Then there are other projects like EW systems projects, it is around 1,000 crores there. Then some electro-optic projects around 500 crores. So if you see the total exposure to our dependency on Israel is there around 4,000, 5,000 crores in execution in next year and this year. So that is the extent where there is an impact. But we are working with that. Our partners in Israel, they are very confident to sort out the temporary setbacks, was what they say.
Okay. And I think if I remember it right, you said you got something early part of January, right? Some of the deliveries have started to come through.
What did not come around 500 crores, they landed up in January. What they were supposed to come in December.
I understand. Okay. So that's a positive. Sir, second, given that the general elections are around the corner, do you think that could impact ordering for us, say, in Q4 or Q1, or generally elections don't really have any impact on defense ordering?
I don't think there will be any impact because already government has fast-tracked many procurement for this year. And that's why you see that last year, most of the orders, they got finalized in March. Whereas this year, seeing that election and all, government fast-tracked and they have concluded many contracts much before that election starts. So that was some positive action taken by Government of India, MOD, concluding the contracts before the start of the election and all. So I don't think, and then next year's procurement process will be post-election, which is that post-April, May. So I don't think there will be any impact on procurement process of government because of election.
Okay, that's good. And so just last one is on the balance sheet, if you could just share numbers on your debtors and cash balance, please, and inventory.
Yeah, just hold on. 1 minute.
The receivables at this point are around 7,700 crores.
Okay. Inventory and cash, please.
Inventory is 7,000 crores. Contract asset is 5,600 crores. Cash balance is 8,000 crores.
Okay, sir. Great. All the best.
Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, how much revenue we lost in the quarter because of the Israel conflict?
If you see that, it's very difficult to quantify, but around 500 crores we could have done more. That's which landed up in January. There are other delays also which will be compensated in this Q4.
Okay, so this, whatever the revenue we could not book, that will book in the fourth quarter.
That's what we are trying. We are making an effort.
Sure. And sir, on export side, any initiative or any opportunity for us?
See, it's a continuous ongoing process. We are working with many government agencies. So if something concrete comes to significant value, we'll definitely share with you.
Sir, last question from my end. What is the capital expenditure plan for next 2 years?
Next 2 years, it will be in the range of 700 to 800 crores each year.
Each year. Okay.
Yeah.
Sure. Thank you so much, sir.
Thank you.
Next question is from the line of Gagan Tareja from Ask Investment Managers. Please go ahead.
Yeah. Good morning. Can you hear me?
Yes.
The first question is around your gross margins and operating margins year to date. While sales have not really grown, your gross and operating margins have expanded substantially, and they are currently above, the full year guidance that you generally maintain. So how should we think of full year gross margins and full year operating margins?
Gross margin for the full year should be around 42%, and EBITDA margin should be around 23%.
Which would mean that in the fourth quarter there will be a steep fall in both gross and operating margins. Because otherwise...
It is only the composition of product mix which is sold in the first 9 months and in the last quarter. There are various products. So there is a composition of product mix which has sometimes higher consumption, sometimes slightly lower consumption. So that mix determines the gross margin. So going forward at the full year, we should have around 42%.
Okay.
But there is some products which are having a higher material composition which will be sold in the last quarter. So that way it will average out to 58% and we'll end up with a gross margin of 42%.
It's yearly when we project on all product mix how we are going to do in a total year. So it's not a quarter to quarter fall or that increase. It's so happens that the items which have got lesser material content, they got executed earlier, and those which has got slightly higher material content, they will go in Q4.
No, I completely take that point, sir. My question was that simply that year to date, first 9 months is 47% gross margin. If you are implying that full year will be 42%, then effectively fourth quarter should be less than, much less than 42%, right?
No, gross margin up to December is 45%. It is not 40, it's not 47, it's 45. And year end it should be around 42 based on the product mix. And EBITDA margin will be around 23. There will be slight differences. It will not be a very constant that it will continue in the same manner. Because of the product mix, it could be slightly different in the last quarter. But overall, the guidance given us around 42% gross margin and 23% EBITDA, we maintain that.
When you say 45%, are you including other income in your sales also to calculate your gross margin?
No, it is basically sales plus accretion to WIP and to material consumption. The percentage is taken as for margin, sales plus accretion to WIP to material consumption.
And your other expenditure year to date has also grown substantially, despite the fact that sales has grown at 4%.
Based on the nature of operations, basis of operations growth happens, the other expenses also grow. Like for example, when the growth happens in turnover, there could be a little more traveling, and normal employee expenses will also increase based on the DNS allowance and increments. So that growth is there in other expenses.
So would it be reasonable to assume that margins, operating margins for the full year could land up closer to 23% rather than to 21%?
No, 23%, yes. EBITDA margin should be around 23.
Yeah, when we started, we gave guidance to 21 to 23. Now we are giving guidance that it will be 23% in the year. So lower is, you can ignore that lower guidance.
Okay, sir. The final question from my side, sir. HAL announced that they had received acceptance of necessity for the Sukhoi upgrades, additional combat helicopters and as well as the LCA. Is it possible to help us understand what could be BEL's scope of work in these projects? I would presume there should be substantial scope of work for BEL.
See, there are avionics packages which go in this, but it's only acceptance of necessity they have received. So, what will be the your products will be going LCA that initial we are giving some avionics package. Next, what will be there? What will be upgrade? All these things, pricing, all these things we have to work with HAL and then finalize. So, at this point of time, it is premature to say that give an exact figure.
Okay. And for the 25,000 crore order intake guidance that you're giving for next year, how much of that is going to be dependent on QRSAM, or are you keeping QRSAM separate from that 25,000?
No, see, QRSAM, if you see that it will be around 20,000. If you see Air Force and Army taken together. So we are factoring at least half of that in this projection. So when we say that around 50,000 crore in next 2 years, then we are factoring total requirement of QRSAM.
Okay. So 50,000, in that 50,000, 20,000 crores is from MRSAM.
Yes, QRSAM, that's what we are expecting. And it all depends upon how to,
so 2 years,
government...
2 years intake will be 50,000 crores, 20,000 crores could be QRSAM, Army, Air Force, depending on in how many installments they order, regiments and squadrons, they will decide based on their budgets.
And MRSAM also, I think there was a reasonable pipeline left, right? So what could be the contribution of MRSAM in that 50,000 crores of intake?
No. MRSAM, see, they are still started discussing. So let some concrete progress happen, then we'll...
MRSAM is not factored in this 50,000.
Not factored, okay. All right, sir. Thank you. I'll get back in with you.
Thank you. Next question is from the line of Harshit Patel from Equirus Security. Please go ahead.
Thank you very much for the opportunity, sir. So my first question is on the Uttam radar. Has there been any progress on this front? Have we supplied the prototype? And if you could, how will the production quantity be divided between us and the competition?
See, at this point of time, I would not like to comment because it's under DRDO process. Prototype, we have worked. I have to check it whether we have supplied or not. What division will happen, how they will go, when they will induct, all it's a long-run process. So it's premature to say on Uttam radar at this point of time.
Sure, no problem. So my second question is on the medium altitude, long endurance drones, the Tapas or the Archer UAVs. So what is going to be our scope in this project? What kind of payloads will be supplied by us? I believe the defense forces have consolidated the requirement of 155 numbers of such drones, but we are still facing competition from Israel on this, both Heron as well as Drishti, which are going to be assembled by Adani Defense. So in which direction this project is going as per your opinion?
This we have to wait and watch. That's only I can say.
So, but do you think the user trials, etc., those things are going as per plan? Or is there some delay in this whole process?
Where DRDO is there, other partners, HAL is there, BL is there. So it's moving, but how it takes the shape, how services look into it, what is their priority, what they want. So at this point of time, it is very difficult to tell anything concrete on this.
Understood. That was all from my side. Thank you very much.
Thank you. Next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you for the opportunity, sir. So my first question is, out of a total order book of over 770 billion, so are there any slow-moving orders which have been in your order book for, say, more than 2 years or 3 years?
No, there will be orders in our order book because execution time itself is around 3 to 4 years. So there are orders which are slow-moving also, but depending upon that customer's requirement and all it happens. Sometimes...
So any orders beyond that which are not being executed or which are just sitting in the order book right now?
No, 76,000 is fully executable orders only. Whatever orders we are talking of slow-moving is not slow-moving. It is just the staggered delivery based on customer requirement. But if your question of 76,000, any order is not executable at all, it's very old order, it's not the case.
Okay, got it, sir. Thank you for answering my question.
Thank you.
Thank you. Next question is from the line of Lavina Quadros from Jefferies. Please go ahead.
Good morning, sir. Congrats on the good set of numbers. Just wanted to understand on the non-defense side. I remember in the last call you all mentioned that your ATC tower management system was progressing well. You had installed it at Bhubaneswar Airport. Generally, on non-defense side, is there any other updates on your business?
Non-defense side, yesterday we signed a contract with the Central Board of Indirect Taxes and Customs for their infrastructure, IT infrastructure upgrade. Around 665 crores plus taxes. A month back, I think 2 months, you signed a contract with UP government for their upgradation of UP 112. Bhubaneswar Airport, what we did for air traffic management system, that process is undergoing in AI. So, depending upon their priority when they place the order, but discussions are going on. So, non-defense side also we are working.
Okay. And, sir, just wanted to check, first 9 months, your non-defense revenues with the EVM delivery, what is it as a percentage
it's
of overall sales?
20% now.
Around, okay, 20%. Understood, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. I just wanted to check on the order backlog and in longer term, how are we looking at gross and EBITDA margin based on the platforms that we have, like a steady state margin, say for 25-26. How do we look at it?
You are talking of 25-26?
Yeah, in general, based on the backlog that we have, the platforms, how do you kind of see our gross margin and EBITDA margin trends? Because as such, we are on an improving trajectory, so just wanted to check on that.
I think once this year-end financials are over, when we have the April, this one we'll give you the guidance for 24-25, okay? If you are asking for 25-26, I think we'll go one at a time. We'll give for 24-25 once this year-end this commentary we give. But generally the orders, they are all long-term orders and the same orders we are executing. So we expect the things to remain in the same margin range, same range.
Sure, sir. Those were my questions. Thank you.
Thank you. Next question is from the line of Aditya Agarwal from Ambit Global Private Client. Please go ahead.
Hi, I'm audible.
Good morning.
Hi, good morning, sir, and thank you for the opportunity. So, a couple of questions. So, the first one is on the non-defense piece, as the previous participant had asked. So, I understand currently, as you mentioned, 20% is non-defense. So, in non-defense, what would be the sub-segments that will be focusing on? So, metro and civil aviation, I understand, are there. But anything else which you are seeing the momentum picking up there? And what would be this mix that you will target, let's say, 3 years or 4 years down the line?
See, apart from metro, civil aviation, cyber security is one thing which is coming up. We have established a new strategic business unit for cyber security. We are working with AIMS to ramp up their cyber security. Then we have a lead from Ministry of Health also. They have given us letter for MOD cyber security. Magnet, we are working with them. So this is cyber security is one area which is giving us an opportunity. Apart from that, and then IT infrastructure upgrades, establishing IT infrastructure. Smart city is one area where we have done. So these are the area in civil sector where we are working.
Smart city and EVM VPAT will continue to be there, and more entry would be there into metros, civil aviation, and cyber security.
Got it. And so just to understand, so currently it's 80-20, right? So 20 is non-defense. So going forward, this 20 you expected to go towards 25-30, and this is what you'll be targeting, or it will remain at similar levels?
Defense also is increasing with a much faster rate.
One, and second thing, EVM VPAT execution has made it actually 20% this time non-defense, but otherwise it will not be in that range. It will be lesser than 20 only. Because of the EVM VPAT, larger chunk of sales happening, it has happened to be 20% this till December.
Got it. And so just to understand, that usually, let's say in terms of margins, so defense, non-defense, broadly it will be in the similar range, or there is a difference between the two?
So we would not like to tell on the segment as where it is more or less and all. Overall margins we tell it is 42% we'll maintain gross margins and 23 EBITDA margins. So we would not like to comment on defense or non-defense or things. Anyway, point you can understand is when non-defense is going to be much lesser, the overall business itself is more on defense only. Okay.
Got it. And so what's the currently exports mix for the quarter?
Exports up to December has been around 400 crores.
Okay. Got it, sir. Thank you, sir, and all the very best for the future.
Thank you.
Thank you. Next question is from the line of Abhijit from Yes Securities. Please go ahead.
Good morning, sir, and thank you for the opportunity. So continuing from an early participant's question on drones, sir, a more broader question on unmanned aerial systems. So, sir, last 2 years, what we have seen is that UAS has been a very effective strategy in the battlefield. And a lot of countries have been using it to very good effect. So as a pioneer in electronics industry in the defense segment, so what will be our role in the development of the ecosystem in India going forward? Like, it's more of a long-term question.
Yeah. There are two parts if you see that unmanned system, drone system. One is the drone, another is the payload on drone, and third is the anti-drone. When drones are coming, you should have an anti-drone system. So we are very strong in anti-drone system. We have developed along with DRDO very robust anti-drone system, and we have supplied it to Army, Air Force, and Navy. We have given demonstration to Border Security Force also, and they are also working and placing the order for that. This anti-drone system is a very, very advanced, which has got RF jamming, apart from radar system, electro-optic system for detection of the drones, for countermeasures like RF jamming and directed energy weapon, like immobilizing it with the directed energy, that is laser. So this is the one area where we are very strong and we are consolidating. Second area we are working on is using these drones for some of our product payloads. Like we are developing low weight EW systems which can be mounted on drone, which will effectively increase the range and reach and the coverage of our EW system on land-based also, and now there is a requirement for these EW systems for sea-based also. So this is another area. As far as drone is concerned, low-end drones we are not working, but definitely high payload we have one strategic business unit working, trying to collaborate, work with various partners. So that is the third area which we are working. So we are addressing this unmanned system area in all three aspects.
Right, sir. And as far as the high payload drones are concerned, there right now in our revenue there is not much contribution, but going forward you are saying that directionally.
These are upcoming. Our major contribution, if you see that from drone side, is from anti-drone side as of now.
Right, sir. Thank you, sir. That's it from my end.
Thank you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity. I have two questions. First, on QRSAM, what is the likely delivery timeline for the 200 billion rupee contracts that you expect to book over the next 2 years? Would it be, less than 3 years or more than that?
It will be somewhere starting from 2 years to 4 years.
2 years to 4 years.
It will involve, first is FOPM, first of production model, which we have to give, which will get cleared. After first of production model, then the bulk supply will happen. So FOPM will start anywhere around 18 months. We should be able to give FOPM, which will be validated, evaluated, whatever additional requirements are given by services, we have to prove. And post that, delivery will start. So another 2.5 years, if you see that, for remaining delivery. Okay. So total time should be around 4 years.
Got it. So till you reach the FOPM stage, percentage revenue booking, I'm assuming, will be much lesser.
Lesser. It will be lesser. But what we do is that we start manufacturing process because for bulk supply also. Because this in FOPM also there are certain capability which are to be demonstrated, certain items to be evaluated. But because that whole system has been evaluated as a whole. So we don't expect in anything in FOPM, not major changes. So we start that production also, and once FOPM is cleared, very quickly we ramp up and we start delivering the equipment.
But till FOPM stage, is it reasonable to say that less than 20% of the revenue would be booked in 18 months?
Yeah, less than only. See, major revenue will start only after FOPM.
Got it. The second question is, if you see 15% revenue growth in FY25 and your order inflows are in the 240-250 billion rupee range, then the order backlog growth will, peter out because your inflows and revenue would be of similar magnitude. So in FY26, with a stable order backlog and possibly, your revenues, if you grow from that point, would cross your order inflow number. So your order backlog growth in FY26 by implication would be a negative number. So do you think that your FY26 revenue with a flattish order backlog can grow 10-15% again in FY26, or would that be a stretch?
Let us see. It's difficult to project at this point of time. That's what we envisage, because position also will improve. We are also working on various products, various technologies. So these are all conservative figures, what we have told you in next 2 years. But once we reach closer to that, we will revise those guidelines.
So let me rephrase my question. If your order backlog is flat year on year in FY25 or is growing in low single digits, is the execution timeline, because you said QRSAM, which is a large inflow contract, will see limited order revenue booking in the first 18 months. I'm just putting it logically. Doesn't it imply that there should be deceleration in revenue growth?
No. Around 15% we will be able to see.
To answer your question, the current year, we are at 76,000 crore of order book here. And year end, we will be having little more orders with inflow coming in February, March, and we'll be ending up with 70,000 plus crore order book as on 1st April of 24.
Sure.
And then even if you take the 15% growth, if we end up at 20,000, we'll have to see how it happens, 20,000 and then 23,000 in the next year. Still it is 47,000 plus the order intake of next year. If it happens to be in 20,000 also minimum front, we'll still be ending again at 65 to 70,000 crores in the next year. That is March 25.
Yeah, what I'm saying is on 65 to 70,000, would you again do 260 billion rupee of revenue, or would you do 230 billion, which will be stable?
When QRSAM order comes in 25-26, naturally the total order inflow will be much more than the revenue in that year. Okay. If QRSAM order will come totally, execution will only happen in 3 to 4 years. So in 24, 25, 26, we should receive 30,000 plus crore order minimum in case we get the QRSAM order 35. So that year the execution will be only 26,000, say 15% another growth if we take, it will be around 25, 26,000. So that will add to the order. So it will be running. So at any point of time, as I was telling, it will be minimum more than 2 years of revenue will be there in the order books at any point of time. As in the in the next 3-4 years, foreseeable future.
This is very clear. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the question and congrats team for a very good set of inflows for FY24. Just wanted to check some things. First, similar to defense pipeline which you have mentioned for 50,000 crores. Can you also share something on non-defense pipeline which you have regarding smart infra, metros and some other projects? That would be helpful.
See, these projects are very competitive projects. Many players are there. So it all depends upon how market goes and how opportunities are there. So our projection has been 15-20% of civil business will be there. So all these things, none of the civil businesses, I think, nominated basis. Mostly are all competitive.
And they don't come in that range as even when it comes in 100, 200, 500 crore range, whereas the defense order can come even in 4,000, 5,000 crore range, a single order. So that also matters.
Understood, sir. Thanks for the clarification. Just on the question on revenue, Q4 is going to be a steep task of 8,000 crores. Just to get the more comfort, sir, which are the large projects which you're expected to execute in Q4, which can really help you achieve this 8,000 crore number? So just
LRSAM will continue to be executed. We have got an order backlog of more than 6,500 crores. Then we expect one IEWR system is there, and the TSA 4090. Many are there. There are many others. We have 24 strategic business units doing many projects. So there is Akash Speed, some WLR will go, some tank upgrades will go, shipyard, that sonar communication systems, ship data network. All these things are in pipeline. Fire control systems and ship-based. Then the SDR TAC will go to Navy. So 24 SBUs, they are working on different projects. So it's hard to spread across. So if you see, you are telling 8,000 crores, divide by 24, each SBU, how much it will come.
Fair enough, sir. And is there a risk that even LRSM, which you have seen a spillover from in Q2 as well and now in Q3, could there be a spillover in Q4 as well if you're not able to get things from Israel on time?
It's a very $1 million. We have got an order book of 76,000 crores. So we are aiming at a growth of 15%, reaching at 20,000 crores. So we expect that the LRSM should be executed in time and items should come from Israel. Even otherwise, as we tell that we will always have one plan A and plan B to, when we'll ensure that we reach 20,000, 15% growth.
Understood. And so last question, just on 4th of January, there was a news that Bharat Electronics has become an L1 bidder in the unmanned fighter aircraft system, or futuristic unmanned fighter aircraft. And so this will be completely developed, this product by you, or is it with DRDO? Can you share some highlights? What kind of system is this?
Unmanned fighter aircraft L1, I am not aware. Let me find
This order was in the range of what, 200 crores you are mentioning?
Yes, sir, 230 crores, yes, sir.
230 crores, and it was with Godrej or somebody, I think.
Yes, absolutely, sir.
Okay. What is your question on that?
So can you share some, understanding on this particular product?
I understood. Because it's value was small, it's a test setup. It's for aircraft test setup, which is to be established. That is called Iron Bird and something like that.
Right.
So it's not that fighter aircraft which we are developing. It's a test setup, futuristic test setup for a fighter aircraft.
Okay. And so what is the development timeline or any size that you can share, sir? Opportunity here?
Which one?
This order was 200 crores, not 230 crores.
230 crores.
Yeah, that was a developmental size. But any opportunity size?
It's not a product, it's a test setup.
It's a test setup which is being supplied by us. It is more an infra type of a thing for the customer.
Okay, fair enough, sir. Thank you and wishing you all the best.
Thanks.
Thank you. Next question is from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thanks for the opportunity. I just want to ask you about the drones once more. So, just to understand, does Bharat Electronics make the entire drone itself, or is it just a supplier of, the various equipment such as avionics and EW?
Our main focus is on payloads for the drone and anti-drone system. Normally, for manufacture of drones, we tie up with partners.
Okay, understood. And just on the, the 30 to 35,000 crore expected order intake you expect over the next 2 years, of course, that's 20,000 crores for QRSAM, but in the 30 to 35,000, could you quantify any of the major orders that you're expecting?
See, these are all spread across. If you see, there will be EW system, Shatrughat and Samaghat, EW system for land-based. That is in pipeline. Then there are some radars orders. There is a requirement for Ashwini radars. Of course, it is multi-vendor. Then mission system for airborne applications. Then IFSS for Air Force, F-Shakti. So, see, it's all hundreds of line items which are under process.
Okay, got it. And just just to clarify, you mentioned I missed the export number that you mentioned. Was it 400 crores for
400.
months?
400.
So for 9 months.
December was 400 crores.
Oh, in the quarter. Okay. Okay, and the total exposure that you had mentioned to Israel in the order book?
Around 4,500 crores.
Okay, and this you don't foresee many issues. This can still go ahead as planned. Of course, there were issues earlier, but
things are moving. It's not like things have stopped. It's only some spillover because of that geopolitical situation, flights not getting finalized. If it is a shipment by ship, it has to take a longer route now than it was coming at a shorter route. So it is taking some more time. So these are type of challenges are there. Otherwise, as such, manufacturing testing are going on. Sometimes in our partner, they face some problem in some basic components, electronic components. So these are challenges are there, but in business, these will always be there somewhere or other. So we are there to address those challenges.
Understood. Thank you so much and all the best.
Thank you.
Thank you. Next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you for the follow-up opportunity. So my question is on the lines of we are seeing increased participation from private sector in especially in batteries, arms and ammunition and laser electronics. So how do you see opportunity in this space going ahead, especially for BEL?
Which one? Batteries,
laser electronics and arms and ammunition.
Because people are there. See, these are our also, if you see that lasers we are making for anti-drone systems. There are private sector also, they are also making. So we are competing with them. Similarly, arms and ammunition also. If you see, our exposure is not very high in order books. So this is area where we are trying to enter into that. So competition will be there. We will face that competition. Private sector will be there in these areas.
But the opportunity in arms and ammunition is completely an import substitution play, or previously it was something which was made in India to quite some extent?
It will be import substitution. So we are trying to tie up with OEMs also and some indigenous developers also in this arms and ammunition.
Got it, sir. Thank you so much.
Thank you.
Thank you. Next question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, so thanks for the opportunity. My question is with respect to the non-defense side. We have been highlighting many opportunities with respect to homeland securities and sometime EVM and then related to TMRC systems. Just wanted to understand incrementally can non-defense, you did highlight the defense pipeline, can actually ramp up or any opportunity which you are seeing in next 6 to 12 months from any of these business segments, sub-segment or verticals in non-defense which can significantly contribute to your intake?
See, if you see the total our order book and orders in pipeline, non-defense will remain a minor portion. So 15%, 10%, 15%. So value will not be that significant, but yes, we are in technology field and we would like to contribute in non-defense field also. That will spread our portfolio. So we are working on that. But significant contribution will be from for defense side.
Yes, I wanted to understand on capex for the 9 months and guidance for FY24 capex and FY25 capex. And
capex for the 9 months has been around 400 crores, and we expect it to be around 700 crores by the year end, March 24. And next year also we expect it to be in the same range.
And sir, on capacity expansion, which side we are expanding capacities? Which side of
capacities, we are building up some infrastructures and some plant and machinery. Some buildings are coming up. On the capex front, as we are told, there are some infrastructures coming up at Palasamudram. It's coming up in Hyderabad. It's coming up in Machilipatnam. And of course, related to projects also, there are some machineries which you have to buy, some test setups which you have to buy. So these are the major capex which are happening.
Sure, sir. My question again, sir, on the 50,000 cumulative, I think I might have missed, you might have indicated 50,000 crore defense pipeline.
50,000 crore total order we are expecting to get in the next 2 years is what we told. We didn't tell defense. We told 24-25 and 25-26 put together. The total order intake should be in the range of 50,000 crores all put together.
Including FY24 and FY25, is it?
April 24 to March 26.
Okay. So, sir, just wanted to understand, we were guiding 20,000 for this year. And we achieved. We are going to achieve almost 30,000. And whatever you have been indicating, is it the case that your baseline guidance can go up to 23,000-25,000? So you did highlight it 50,000. Is it the baseline order intake which you are expecting, or?
No, it's just a realistic estimate of what we see today. It's not a baseline. It's not a higher side or lower side. It's just a realistic estimate of what we expect to receive in 24-25 and 25-26 based on our assessment at this point of time, based on the projects in pipeline.
Sure, sir. Thank you very much and all the best.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all participants in the conference, please limit your question to only one question per participant. Next question is from the line of Abhishek Poddar from HDFC Mutual Fund. Please go ahead.
Thanks for taking my question, sir. Sir, regarding the positive indigenization list, could you give some understanding that this year's order inflows of 28,000 crore, does it have any components and items from those 410 items that was put in? And if you can give some roadmap also, that what are your expectations for 25, 26, 27 based upon that list?
See, it's very difficult to exactly match those lists, but whatever positive indigenization list is there by Government of India, we are in those, in our area of business, we are there. So if positive indigenization list, some items are there, definitely we are one of the key supplier for those items. But it's very difficult to exactly map and tell that this much order has come from positive indigenization list.
Right. So, sir, for example, when Defense Minister has announced this, I think there were media articles which indicated that the amount would be, which would be ordered because of that list would be in excess of 5 lakh crores or so. So, any numbering for you that what could be your share in those lists, not for next 1 year, but let's say next 3-4 years? Any exercise that has been done?
No, we have not done that exercise.
Okay. But you do expect that in next 2-3 years you start seeing some more positive traction?
Yes, definitely.
All right. And so second, on the Akash missile, if you could give some understanding there, that what order expectation there from either directly from MOD or from the other PSU who have won the Akash orders to you?
Akash, we got the order from BDL. BDL got the order for 2 regiments from MOD, and that in turn that our portion for our ground equipment around 2,740 crores order we got. Then BDL also got some export order for that. So ground equipments and radars and all are from our side. So that order also got. So Akash, we are trying to get the export order. So that is also an opportunity for Akash weapon system.
Okay, so possible that even you get the export order directly from Akash rather than BDL getting it?
Possible. Either BDL gets or we get. We share because our work share is almost decided. What is the work share of BDL and what is the work share of BL. So it doesn't make a difference who gets the order. Ultimately, our portion of business will come to us. If BDL gets, if I get, BDL share of work will go to BDL.
Understood. So in that 50,000 for next 2 years expectation, anything on Akash being built in, or that is beyond 26?
Some projections are there, but not very, very aggressive. But definitely we have put in that 50,000 some orders from Akash side also.
Okay, understood. Thank you, sir. All the best, please.
Thank you.
Thank you. Ladies and gentlemen, please limit to one question per participant only. Next question is from the line of Lavina Quadros from Jefferies. Please go ahead.
So one final question from me. Your working capital, because your order book growth is much faster than your revenue growth, would it be fair to say that because of contracted advances, your working capital will reduce by the significant?
No. Working capital, as we have been telling, that we are maintaining the ratio of current assets to current liabilities remains at around 1.5. And the liquidity is good. We have a cash on this one as on 31 December at 8,000 crores. Trade receivables are around 7,700 crores. So working capital ratio is good now. It's in the range of 1.5. Okay. And it continues to be in the same range.
Perfect. Thank you.
Right.
Thank you. Next question is from the line of Gagan Thareja from Ask Investment Managers. Please go ahead.
Yeah. Thanks for the follow-up, sir. My question is that of the total order book of 76,000 crore, directly or indirectly for your components, how dependent are you on the Russia-Israel geography?
See, we had dependency on Russia for some of our equipments related with tank electronics. But we had gone very, very aggressively on indigenization of those items. So tank electronics from next year onwards, our dependency on Russia will not be there. So coming to dependency on Israel, yes, for LRSAM, IW, electro-optics, there will be dependency on Israel. But then that Israel also is working aggressively, and they are ensuring that pipelines are maintained. They are also working, factories are working despite this war. So some delay may happen here and there, but I don't think that any materialistic impact will happen because of our dependency on Israel. Third thing is that, yes, since infrastructure or ecosystem of basic electronic components is not there in country. So being in the electronic industry, whatever semiconductor issues and supply chain issues will there, we will do get impacted by that. For that, we do various strategies and plan how to address those and meet the expectations.
Is the shipping related problem around Red Sea something which can materially impact you in terms of the time to get your supplies, or
not significant, because you might have heard in the news also that the Indian Navy are there. They are patrolling. They are making another foreign countries, Americans and all are there in those areas, and they are making sure that the shipping lines are kept open. Some of the cases it takes more time because it changes the route. So the question is of gap of around, if it is by ship, another 20-25 days more time. If by air also, instead of directly coming to India, it takes alternate routes, and then some transshipment, something happens. So that is the only impact. That's what we see.
So final one, sir, upgrades, AMCs, software upgrades, spares, and so on. What part of your order intake annually, could come from something of a repetitive or maintenance-oriented nature?
See, services, we have done around 11%, 10 to 11% from service. And then another, you can say that 5-10% will be from spare supply. And upgrades, it comes as a significant for existing platform and go for refit and upgrades. So in refit and upgrade, for them there is upgrade, but in many platforms, when they go for upgrade, they change the equipment. So for us, it becomes a supply of new equipment.
So 10 to 15% of sales, you're saying, or you're saying of order intake?
Sales.
Right. And in the low Earth orbit satellite business, I mean, it's a business which a lot of the private sector companies seem to talk about as one where there could be scale later on. Is it something which interests you or which you see as...
Yes, we have one business unit which is working on this, the business opportunities and what we can do.
Anything more you can elaborate on that?
Not at this point of time. Maybe once we make progress, then we'll elaborate.
Okay. Thank you. I'll get back in the queue. Thanks.
question is from the line of Vipul Kumar A. Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. Most of my questions have been answered. Just we had a MOU for battery management system some time back. Any progress on that, sir?
I have to check it up. I have to check it up.
Are you mentioning about the Triton MOU?
Yes. Yes, sir.
Not much progress.
No, not much progress on that. And that is not factored also in this 50,000 crore order.
Okay, sir. Thank you and all the best.
Thank you.
Next question is from the line of Manish Goyal from Thinkwise Wealth Managers, LLP. Please go ahead.
Yeah, thank you, sir. Just on a continuation on the services and AMC. So, will the revenue share continue at 10-11%, or we probably see a increase in revenue share, because in recent past we have received a few orders in this segment? And what would be the share in the order book of services and AMC?
Services and AMC maybe around 10-12% will be there. And it all depends upon how services go, their philosophy for maintenance. If you know, for complex equipment, they are going for AMC. But for standalone equipment, they have got their own repair depots, base repair depots. For Army, EME is there. Naval dockyards are there, they are doing. So yes, something they will do. But as of now, it is around 10.
90-10 is a ratio which has been there, and which is there for the December and also April to December. Order book is also in around 90-10% only. So it may remain in the same range in the coming year.
Right, sir. And ideally, the margins should be definitely much better than the company average margins.
Segmented things we avoid telling.
No, we are talking of overall margins, and we are told that current year we are expecting a gross margin of 42 and a EBITDA of 23.
Sure, sir. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments.
Yeah, thank you all for questions, and we tried our best to give that our response to all the questions. I can only say that we have a very positive outlook. Major three guidance what we have given, profitability, order inflow and revenue. Profitability and order inflow, we exceeded our guidance. Revenue, we are a bit short, but we are very confident the way we have done in Q4 for order inflow last year. This year we will do it for revenue guidance also. Thank you.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.